and welcome to Sibos 2025 in Frankfurt. I'm Hannah Wallace, and joining us now in the FinextraTV studio is Arun Kini, Managing Director of Payments APAC at Finastra.
Thank you, Hannah, for having me here.
Aaron, it's great to have you in the studio. We've got a lot to cover, and I want to begin by talking about this undeniable demand for more transparent, faster, cost-effective global transactions that we're seeing, and how you think the industry is progressing to meet this demand and create seamless cross-border experiences. So we'll begin there.
Sure. Thank you for the question. You're right. I think there's a lot of change that's happening, both from a regulatory perspective as well as outside of the regulatory space, because you do have third parties as well, whether you look at existing players like Visa coming out with alternative networks or some of these stablecoin based initiatives. But I think all of them are aimed towards one thing, which is to make it faster, cross-border payments, potentially cheaper, and make it a lot more transparent as well. And if you look at Asia Pacific, given some of the advances that ASEAN in particular has been leading in that space, I think that's inevitable, because customers in that part of the world are also asking for it from their banks. We already hear banks telling us about corporate customers asking about stablecoin based payments, even though it still has some distance to go in the form of regulations. So, and if you look at ASEAN in specific, majority of the corporates there are SMEs. So for them, the faster they can receive the money, the better for them from a working capital perspective. So in general, I think there is a trend both from a corporate or a customer perspective, including the retail side, as well as from the corporate side of it, demanding that banks provide them with faster cross-border transactions. And I think some of these industry changes are a response to that as well. So yes, I think in general, we are seeing that as a trend, and we expect that to only continue to grow.
Well, thank you for bringing us up to date. Interesting to hear what you're hearing from your consumers. And of course, domestic regulations, including market initiatives such as G20, are really pushing banks to look at the interoperability between schemes. Tell us, what are the lessons learned from those changes, and how do you think strategies are evolving as a result?
Right. So I think if you look at, to take the G20 as an example, right, there are 2 or 3 broad themes out there. So one is, how do you reduce the cost of a transaction so that the fee to the end customer is reduced? How do you give them alternatives? And how do you ensure speed again, right? Because one of the conditions is 75% of the transactions getting settled in less than an hour. And if you look at all of these and combine it with what we just spoke about in terms of the alternatives that are coming up, each of them in a certain way helps meet some of those requirements, right? So when you talk about alternative networks, it gives banks an ability to take an alternative solution or an alternative product to the customers and say, it's not just SWIFT, I now have a Visa Direct, a MasterCard Send, a Thunes, a Partio, doesn't matter which one it is. From a cost perspective, again, it's not, correspondent banking relationships are not necessarily the cheapest way, because there's liquidity tied up, there's a cost to managing those transactions. So how do you enable, how do these alternative networks enable banks to do some of these cross-border transactions without necessarily setting up such a network in place? And the third is from a speed perspective. And I think from a speed perspective, it's not just alternative chains, but also some of the regulated networks like Nexus that are coming up, right? Which is essentially connecting domestic cross-border schemes and making them cross-border, domestic immediate payment schemes and making them cross-border. So each of these, I think, is helping address some of these pain points that both customers and banks see in this space. And they're essentially forcing banks to relook at how they go to market with their cross-border payment propositions, and how are they helping customers meet some of these objectives that they have as well. So it is forcing banks to take a relook at how they play in that space.
And taking that into account, then, what do you think needs to be front of mind for banks moving forward, for those who are trying to protect their payments businesses?
Right. So when banks are looking at how do you help address some of these areas, right? I think from a technology perspective, For a long time, banks have been dependent on their core banking or legacy systems to meet some of these requirements. But given the pace of change that's happening, I think they need to look at investments in platforms that are going to help them go to market faster, because every time there's a new regulatory change or a new capability that comes to market, if you're going to have to customize or do code changes to your existing legacy systems, that's not the most efficient way. It increases cost, it takes time. So what's going to help you get to market the fastest and in the cheapest way possible, right? And the fastest as well. That's one. Second, how do you look at solutions that also help you manage your liquidity better? Because there's a lot of liquidity that is trapped in these traditional models of payment. So helping free up that liquidity is also going to help you bring down the costs of those payments. Third, how do you look at payment systems that are going to help you automate and speed up your processing? Because there's a lot of money that's currently being spent in operations as well. So how do you automate it fast enough that it also helps bring down your cost of operations, both from a business operations perspective as well as a technology perspective, right? Because technology, again, a lot of the legacy systems are not cloud supported, etc. So being able to take advantage of modern technology to be more resilient, which again central banks are looking at, being able to take advantage of modern solutions to be able to scale up, scale down as required, so that you don't invest heavy in infrastructure. All of those will also help you bring down your costs and meet some of these objectives that you're looking at. So I think banks do need to look at what they plan to do from a technology perspective to help them achieve each of these areas as well.
Some very good advice to lead off from there. And what about investing in payment hubs? How can banks justify investing in payment hubs such as your own at Finastra, considering the cost pressures involved as well?
Right. A great question, right? Because typically when banks think about investing in payment hubs, the first thing that potentially comes to their minds is the cost of investing and can I afford it? And I think when you take a step back and look at it, yes, you may need to spend some money, but the ROI that comes out of it is multifold, right? Because one, a payment hub as rich as what we bring to the market helps them not just with automating some of these payments and helping with STP, but what also helps, because all of these changes are not happening in isolation. If you need to offer your customer a better end-to-end solution, you also need to take some of these capabilities to market, right, in the form of channels. And customizing your channels every time there's a change in payments is not the answer to it. So a right payment hub will also expose services that enables banks to keep their channels thin, right? So you're not necessarily customizing your channels every time, but making use of capabilities exposed by the payment hub to offer better solutions to your customers. A better payment hub will also enable you to offer better payables, receivables, because the richness in data end of the day needs to get translated into better services, whether payables, receivables, virtual accounts, liquidity, etc. Right? So you name it. So overall, investing in a good payment hub that brings to fore all these modern capabilities that are there, better solution sets that are there, I think will help banks take a much richer portfolio of products to market, and that will automatically result in better customer acquisition, better customer retention, and therefore better revenues as well. So we do understand the apprehension that some of these banks have in talking about a payment hub, but I think one of the things that we're actively working on is helping banks realize that it's not just the cost that comes out of it. The cost component is there, but I think the time to market and the long-term benefits of investing in a payment hub, I think pays off by itself.
Arun, thank you so much for sharing your insights. Looking forward to seeing more from Finastra and speaking again with you further down the line. But for now, I'll let you get back to Sibos.
Thank you.
Thank you very much.
Thank you for having me as well. It's been a pleasure.